ETF is basically a trade deal between these two countries. So people in fiat world can now go and invest in this new country. At a very simple level, the world is getting more digital every single day. I put a poll out on Twitter and I asked people, because I know a lot of people are cynical about some of this stuff and technology investing, but I asked them a simple question. It's like, is the world going to be more digital in 5 years' time, less or the same? 96% of people said more digital.
Yeah.
That is the trend we're playing here. Will money become more digital? Will value become more digital? Will contracts go digital? Yes.
Raoul Pal, the co-founder and CEO of Real Vision, explores the potential implications of the Bitcoin ETF on both the cryptocurrency and financial spheres. He delves into the prospect of the ETF, drawing a substantial influx of new capital into the crypto market, and contemplates the potential for elevated returns resulting from this development. Recently, the crypto world was shocked by the hacking incident of the official Twitter account of the U.S. Securities and Exchange Commission, which triggered a massive uproar in the market. The announcement came at the end of a tumultuous 24 hours for the popular cryptocurrency, which saw announcing the approval of the long-awaited ETFs on Tuesday, leading the price of Bitcoin to spike by more than $1,000. Soon after, the SEC said its account had been compromised, and the tweet was unauthorized. By Wednesday, the SEC officially approved the ETFs, emphasizing its ongoing skepticism towards cryptocurrencies despite the approval. This decision marks a significant moment in the regulatory landscape for cryptocurrency investments in the United States. Raoul Pal suggests that the Bitcoin ETF has the potential to bring about positive changes by making the crypto market more accessible to a broader audience. As per Raoul Pal's analysis, scrutiny of last year's price performance and the usual annualized price fluctuations in the crypto market, factoring in its notable cycles, indicates the possibility of a considerable capital influx from fiat world into crypto land. After the SEC's approval, analysts expect an influx of institutional funds to pour into the crypto space. Some estimates have predicted a $1 billion inflow into Bitcoin spot ETFs in the next 3 months and $100 billion by the end of 2024. Let's now delve into the video to explore more. But before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
We've been building this new digital world, this parallel kind of financial system. Let's call it crypto land. And then we've got fiat world, which is the existing world that we live in. And most of the world's liquidity and money exists in fiat land because it's much bigger than crypto world, crypto land. Now, what this ETF is basically a trade deal between these two countries. So people in fiat world can now go and invest in this new country easily. And so what it's then is a factor of, like with all trade deals, is will my return on capital be higher by investing in this emerging market versus in my domestic economy? Now, if we look at last year's price performance and typical annualized price performance of crypto over time, taking into account it has huge cycles, you know, the Bitcoin economy grows at kind of 100% a year. So in which case, there'll be a lot of money coming from fiat world into crypto land. Another way of thinking about this is, okay, that's great. So it's likely to attract a lot of assets over this cycle. And a lot of assets will wash out when suddenly the returns aren't as good anymore. So we will see that. The other way you can think about it is we are IPOing Bitcoin. And we've all been seed investors or Series A, Series B, Series C investors. And we're now about to go to the big stage. And, you know, many of us are kind of used to recent years where, generally speaking, IPOs haven't done great. But this is early cycle. There's not much investment in this space yet from fiat world. So the chances are we're going to attract a lot of assets. So short term, don't really know. It's not really my area of interest.
Yeah.
What my area of interest is could this attract 10 billion, 50 billion over time of new capital into this emerging market of crypto land? And the probability is pretty high because, you know, a lot of people are looking for higher returns, higher return opportunities. You can see it by the amount of activity that goes on platforms like eToro, in things like Tesla and other technology stocks, right? People are searching out the risk curve because a lot of people are 401k investors in the US. So they invest in their pension but then they also like to have other assets that maybe have a different risk-reward profile. So over time, I think it's very, very positive. It just opens up to more people. Those of us who've been in crypto a long time know how difficult and painful it is to open a wallet, execute your own trades, do all this thing, think about self-custody. Now, platforms like eToro have really helped people onboard and get comfortable with this, but this makes it even easier.
Raoul Pal anticipates that the market's focus will shift towards the Ethereum ETF, with a reasonable probability of its introduction. Ethereum, the second largest cryptocurrency by market capitalization, has long been considered a prime candidate for an ETF. On Wednesday, the historic U.S. approval of spot Bitcoin exchange-traded funds buoyed Ether traders, who are betting the token that powers the Ethereum network could be next in line. ETH traded at over $2,600 in early European hours on Wednesday, up 8% in 24 hours. Meanwhile, Bitcoin prices went up by 1.3% in the same period. Raoul Pal contends that the Bitcoin ETF coincides perfectly with this macro cycle, which involves stimuli, interest rate cuts, and increased liquidity in the market. Let's redirect our attention to a video.
There is a macro cycle, something I call the everything code, that started back in 2008 when every single major government reset interest rates to zero. It was kind of like a debt jubilee. Like, you don't need to pay the interest, guys. We know there's too much debt in this world. Every government reset all of the debts to this 3 to 5 year period. And what's created is this perfect 4-year cyclicality. Now, Bitcoin was born at the beginning of that, and it follows exactly the same 4-year cycle, which happens to be exactly the same as the presidential cycle. So there's this kind of massive cycle that goes on, and usually this period is what we call macro spring transitioning to macro summer, and that's crypto spring, crypto summer. They're all driven by the same macro factors, which is global growth is slow. In some countries like Europe or China, it's really slow. Inflation is falling, and then we're going to an election, so the chances is more stimulus, and interest rates are likely to be cut. That unleashes liquidity, and liquidity sloshes through markets. So the Bitcoin halving is just part of this same cycle. That cycle is the liquidity cycle, which is the big macro economic cycle. And so this Bitcoin ETF is coming exactly as you suggest at the right point for all of these things. And if it plays out like it has done in the past, and there's no guarantees of that, then generally speaking, you will start to attract a lot of new capital into the space. That's always been the case. So currently in crypto, there's 516 million wallets, but they grow at about 100% a year. So if that's right, we'll grow by another 500 million wallets somewhere between 2024 and 2025. And that's a lot of new capital. So I think that it's a very big deal. It's come at exactly the right time. And then the market will start focusing on the ETH ETF.
Yeah.
Which, by all accounts, seems like there's a reasonable probability that's going to come. And so you'll find that the liquidity comes into Bitcoin, it'll flow towards ETH, flow towards other assets, and that liquidity spreads out. And you get what's known as alt season, which is where it starts off in crypto spring, where Bitcoin is the outperformer. It's like the safe assets, like beginning of macro spring, treasuries outperform.
Yeah.
And then what happens is people get more confident, they make a bit of money, and it starts moving out the risk curve. And people in traditional markets will go from treasuries to corporate credit to junk bonds to emerging market junk to private sector lending at the end of it. And then they all get caught out when the cycle turns.
The race for spot Bitcoin ETFs has gotten very competitive, with multiple applicants slashing fees over the last few days. BlackRock shrunk its sponsor fee for its spot Bitcoin ETF from 0.3% to 0.25%, while ARK Invest and 21 Shares also cut its fee from 0.25% to 0.21%. Experts expect some volatility over the next few days. What is your stance? Your input is valuable. Share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.